This is Jim Emter, Van Ahn Company, Alexandria, Minnesota, with your closing grain and livestock comments for October 23rd, 2017. Corn market today up 6 3/4. Let me repeat that. Corn up 6 3/4. Soybeans up 2 cents. Chicago wheat up 10 3/4. Kansas City up 10 3/4. Minneapolis up 3 to 4. So encouraging day for the grain farmers. Might ask a lot of questions as to why as we look at the yield results. Corn yields early, but are being reported very strong. So it's a little bit bewildering as to why. And when you look at managed money short 170,000 contracts, I think that makes some sense in the environment, especially with the beans really lagging to follow suit. Funds are long, managed money particularly, long 68,000 there. So when we got those reports on Friday, very much funds leaning towards the short side of corn, long side of soybeans. I think you saw that even up here to some degree today. Now follow through going to be somewhat limited in my opinion. As we get up here to 355, 360 front month corn, I look for some pretty stiff resistance alongside $9.95 to $10 beans, as we've said here for the last few months. Those are really areas we feel producers should be zoning in on and paying attention to make sound marketing decisions, especially with the good carries in the market. Trying to get out and grab those and negotiate reasonable basis levels we think is of the utmost importance. Feeder cattle on the day steady to down 45 cents, live cattle down 15 to up 45, and the hog market down 132.5 in the front. The back month's pretty much steady there as you get beyond May. Let's talk cattle first. Pretty amazing day when you factor in a big corn rally along with a negative cattle on feed report, especially in the placements on Friday. So for cattle to go from nearly 230 to 280 lower at one point feeders to come back near steady was a big victory under those circumstances. What we see ahead, beef stocks came in at 487.81 on the cold storage report this afternoon. Pork stocks came in at 616.31. So when you look to those are bigger than last month, but below last year, so going to be a little wishy-washy, not provide too much direction, but really look for more of a sideways market from this cattle market. The hog market got against key resistance today, was up near $1 in the front months, failed and finished 132.5 lower, as we feel it should. Pretty stiff resistance there at 65. Exports really going to hold the key as to whether we can extend. If we get big exports this week, that could help, but otherwise look for the hog market to maybe struggle a bit more this week. This has been Jim Emter, Van Ahn Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation.